When you hear of DeepSeek, it seems as though people are questioning the overall amount. Therefore, do you like Amazon committing to $100 billion, to Microsoft more than 80, and similar coming out of Meta, for example?
Yeah, I think for the moment, they have the revenue growth to support those investments. I think people are right to question the long-term return on invested capital equation there, which is really where the debate has shifted. But I think for the moment, again, we're in this moment where we don't know how big this technology can become. And so I think, we lean on those statements such as the risk of underinvestment is far greater than the risk of overinvestment. I do think that's kind of the prudent way for these companies to be treating this for the time being.
And look, investors have thus far given them a pass. Look at Meta shares. Extraordinary 16-day run to the higher side. Many would say that the open source commitment from Meta has been speaking to their large language model operation, the commitment to leaning into AI, even as, of course, they're announcing who's going to be hit by the job cuts today. Just talk to us about some of the thesis around Meta outperforming the other big tech players here.
Yeah, 16-game hitting streak is pretty impressive. I would say Meta has kind of the two key things going for it right now. One, they have arguably the greatest amount of revenue coverage is what we call it. So again, just when you look at the marginal revenues they're adding, they just did $27 billion year over year in 2024. That's plenty of extra revenue dollars to cover the depreciation that's coming into the model from the CapEx spend. So that's the first part. The second part is they just have a heck of a great narrative on all the ways that AI could affect their products, both now and in the future. And so I think the market is what the market's telling you right now is they really believe in Meta's strategy and really AI giving it the most torque to the upside in the future for this model.
Brad, I want to talk about open source technology now that we're on the topic of Meta, because in your note, you actually highlight startups' desire to want to build more end-specific applications on top of already existing AI. And I'm curious how that shift is better for investors. Are open source companies better positioned than closed source companies like OpenAI, for example?
I think there's a debate as to whether the closed source guys actually do decide to open things up because it could to the improvement of their models or the improvement of their distribution over time. Clearly, Meta's open source strategy, I don't want to call it a wolf in sheep's clothing, but there is an aspect where they're looking to leverage sort of developer intel of the world to be able to then potentially pull in those innovations in the model and then use them for internal purposes, which would never see the light of day. And that benefits their products longer term. So I do think, that's definitely a part of their strategy. And frankly, that's really smart from our perspective. So that's I think, at this point, I think that's how they are leveraging open source so well. And again, like I said earlier, the market is really buying into that thesis right now.
One of the other things that we're looking closely at today is, of course, the Paris AI Summit. And we've had a few of these summits over the last couple of years, ever since ChatGPT hit the scene. But I'm curious, as an investor, if anything that comes out of that really affects your long-term thesis, because we are talking about big sums of money being poured into this space now from the Europeans.
Yeah, absolutely. It's kind of funny how this is following the history of tech, right? US innovates, China replicates, and Europe regulates is kind of the famous saying there. Certainly from a sovereign AI perspective, I think countries recognize there's a huge opportunity to modernize and make better use of the treasure troves of data they all have. On the flip side, of course, there's a civil society impact here. What does it do to jobs? Does it make people more productive, or does it just straight up take jobs from and remove or dislocate industries in an adverse way for macro economies? Those are giant questions, right, that are certainly being discussed there. But I think from this point, our perspective, our seat, where we're covering these internet names, they're making all the investments to push the industry and frankly the world forward with this innovation. We have to be behind that at this point.
And you get the infiltration across not only the large language model makers, but those that adopt generative AI. Just think of Pinterest numbers last week and how generative AI is fed into that story. We get the news today from other sources that Lyft is going to be eyeing robo-taxis as soon as 2026. Where are the level of internet names that we haven't yet factored in where Gen AI is going to really be reaching forward in terms of their earnings and revenues?
Yeah, I think, certainly autonomous vehicles, you hear about particularly around synthetic data. So that's being able to take, for instance, real world miles and then model them out into other situations that you couldn't possibly capture in testing people driving around, accidents that could come up, just as an example. So that obviously benefits, we think, the ride hailing names. And there's going to be others. You mentioned digital ads is kind of one of the best sectors where you can apply AI. Web design is another sector we've mentioned. So that's companies like Wix and GoDaddy. Those companies are making it easier than ever to go out and start a small business, build a website, and grow off of that. So those are some of the ones in our coverage we like.
Brad, we had some big tariff news coming out of Washington today. How does that weigh into how you're looking at tech names going forward, especially given all this talk about AI infrastructure, which will require perhaps some of these critical materials?
Yeah, I think we'll reserve judgment on what the ultimate outcomes of those are, given what we've seen over the past few weeks. But I think the impact would align with what the macro impact would be, which is if you raise costs, certainly that's probably not going to be a good thing for these companies that are building out. Certainly Meta, Amazon, and Google being the three kind of biggest bricklayers in this industry.